Shares of Tesla have now fallen more than 15% from their all-time high in mid-December. And joining us right now for more on the company and the stock is Oppenheimer senior research analyst Colin Rusch. Colin, looking at this, down 15% from that all-time high, but there was a pretty big move if you're looking back over the last 2 months at that stock from the election. And, people looking at his close proximity to the incoming President Donald Trump as a potential upside for the stock, too. How do you measure all of this? Let's, I guess, start with the deliveries yesterday and whether that news was as big of a disappointment as it's being portrayed.
I think there's the narrative that's happening with this stock, and then there's also the reality of what's going on fundamentally. And there's a bit of a disconnect here. The narrative is really around AI and the company really executing on its autonomous program. And then Elon Musk's ability to adjust regulation or impact regulations to support Tesla's approach to autonomy. And then there's what's going on with the car market and what's happening with the company, where it's plateauing and is in need of a real refresh on the models here. And that's I think the disconnect here. If you look back at a couple of years worth of results, you've seen revisions lower on both revenue and bottom line, being driven by lower margins. And I think there's another cut or two coming here for Tesla numbers as we look at the Redwood project, or the lower cost vehicles starting to come to market. And so as we look at these numbers, the move higher after the election was really around the promise of autonomy and the impact that Elon can have on its commercialization of autonomous technology. And it's going to take some time, and I think there's some reality that's being built into the stock here that adjusting regulations and impacting the federal government is not an easy or quick process. And we'll see some of that digestion here over the next couple of months as they report numbers.
So the stock's up more than 50% since Trump was elected. By your tone, it sounds to me like you don't think that is warranted, or maybe you need to see a little more before you can buy into it.
We've got some real challenges around getting behind Tesla's autonomous program. The company has certainly been an innovator and a disruptor in a variety of markets, from materials to batteries to redesigning vehicles. And where we're struggling in terms of getting more supportive of the company is really around the execution on its autonomous program. We think there's a fundamental challenge that they have working with a camera-only system, and that they need to really integrate another set of sensors, notably an imaging radar would be the likely candidate here, and then go through a more robust training process with an incremental sensor suite. And so as we look at this and the potential complexity of a compound AI system that's really required to deliver on the autonomous promise, we see Tesla as behind some of their competitors, notably Waymo that everyone's seen, but also companies like Zoox and the development that's happening at Mobileye, or even some of the Chinese competitors. And that's a real challenge for these guys. They had been early on the EV side and really disrupted the market, and they've been a cost leader there. And we're seeing them lose their cost advantage versus some of the Chinese competitors on EVs, and lag behind some of their competitors on the AV side. And so as we look at the fundamental value capture for the company, we're perplexed that they're getting credit for succeeding in this market when they're clearly behind right now. Now, it's hard to bet against Elon given his history and the company, and we've been very bullish in the past, but right now we're just not seeing it add up to supporting the valuation.